I am Community Clo. Welcome to Community Conversations. This is one of these greatest shows on earth because we're talking about, we did the holiday season, we did the first tax season too. And you know, I go to the source for you. He's been in this business for 29 years. Fiscal, fitness, tax, and financial services. It's been helping people like you and like me bring your dreams and goals to life. And he is Mr. Derrick Alford. How you doing?
Doing great, Kobe. Good to be here with you and your listeners again. Thank you for the invitation. It's always a pleasure. We always have some fun when we do your show.
Yeah, so we're talking about this tax season.
Yes.
What's new for the 2020 tax season?
Well, the changes have not been as great as they have been in the past with the TCJA, which is the Tax Cuts and Jobs Act of 2017, which was implemented last year in 2018. But there are some changes, and things never stay the same with taxes.
Good changes?
So some are
Lord.
good, and some are you be the judge.
Okay.
And it depends on the situation and the individual.
Okay.
So there are some changes. First of all, again, thank you for the invitation.
Of
Good to
course.
be here with you again. What's new with us is we're on a new location. We're on the south side now. We're in the Manchester section at 2650 Hall Street. 2650 Hall Street, near where Hall and Midlothian intersect. So we're still in business. This is our 30th year. We're going into our 30th year.
Wow.
So we are grateful. We've been blessed to still be around. Most small businesses don't make it that long, so we don't take it lightly. So we thank you again for the invite. Okay, what's new? A couple things. You remember the good old 1040 EZ and the 1040A? Gone. No more of those. So it's just a basic 1040. You can do everything on a 1040. So no more 1040As, no more 1040 EZs. If you are a small business, a sole proprietor, there are no more Schedule C EZ. So it's just a plain Schedule C. So they've eliminated Schedule C EZ. So that's gone. And as far as the regular 1040, it has been revised. So they've changed the format again. They changed it last year. If you all remember 2018's return, the signature section was on the front of the return.
Yeah.
So I don't know who thought of that brilliance, but now they moved it to the back of the return, put it back on the back of the return, which is probably a good thing because it threw a lot of people off. So they've changed the format, moved some things around. Some of the schedules have changed, so the format changed. So it's a new look. It's a new look again.
Is
Okay.
it easier, much easier to fill out your taxes?
Well,
if you don't have,
I don't know. I wouldn't say that. I
Let-
wouldn't go.
let me
I
be the
would not. I
judge
would
of
not
it.
go that far.
Okay.
Yeah, to say that it's any easier. And again, anytime something is different, there's a change. You have to get used to it. You
Yeah.
have to get accustomed to it. So it changed last year, and it changed again this year. So just be mindful of that. Okay, some of the positive changes are the standard deductions. They've changed. You remember those? They increased last year. Well, they increased again this year.
okay.
So for a single filing status, if your filing status is single, it will be $12,200 this year. If it's head of household, if your filing status is a head of household, instead of $18,000, it will increase to $18,350. $18,350. And for married filing joint, $24,400 is the standard deduction currently. Married filing separate, $12,200. So it is an increase to $12,200 for married filing separate. So those are some of the more positive changes that have occurred. The increase there. Okay, the TCJA, the Tax Cuts and Jobs Act, did quite a few things. There were quite a few changes with the Tax Cuts and Jobs Act. Some things were eliminated, such as tuition and fees deduction. Okay, there you could handle post-secondary education in several ways. Their
Okay.
education credits. There used to be, you could take it as a miscellaneous deduction, an adjustment. The adjustment, the tuition and fees deduction, which was an adjustment on your taxes, that was eliminated last year. Okay. Also, there's a thing called PMI and MIP. That's related to mortgages. That's mortgage insurance.
Okay, okay, turn you up now.
Yes.
You stepping on my lane. Go ahead.
Okay. All right, mortgage insurance. Okay, that doesn't protect the borrower. That actually protects the financial institution. However, the borrower has to pay for it. In the past, you could deduct that mortgage insurance. Last year, you could not. It was eliminated. Okay, also, energy credits. Typically, if you own a home, you have to do something to that house periodically.
Yeah.
Okay, for example, HVAC system. Okay, if you install the HVAC system, a high energy, energy efficient HVAC system, you could, in the past, you could take an energy credit. Last year, it was eliminated for residential. Not unless you install like a solar system or a geothermal system, but just a regular heat pump, you couldn't deduct it. Okay, guess what?
What?
They brought that back.
Really?
They reinstituted it, revived it, and made it retroactive. So now you can deduct those things if that applies to you, to your situation. However, if last year, on last year's taxes, which was for 2018, if you could do it, but it wasn't available to you, now you can do it. But guess what you have to do? You have to do what's called an amendment. You can change 2018's tax return to factor in these changes and get the benefit from it. Now, that's a different process, an amendment. So you have to.
But that's when we have a tax preparer
That's what
like
you have.
you.
Yes, Fiscal Fitness. We're ready, willing, and able to serve you if you need the amendment.
You've been serving me for a number of years, and I'm
Yeah.
satisfied.
Okay, thank you for that plug. Appreciate it. So, you have to file an amendment, so that has been retroactive. So that's a little different twist. A lot of times the changes go forward, but this time the changes have gone backwards. So if that's your situation, then if you can do the amendment yourself, do it. If not, give us a call or some other tax professional a call and get the amendment taken care of. All right, so that's a little different. Okay, some of the other things that are important, basic but important, and that we want to bring up are the due dates. Due dates for taxes. Okay, most people think of the due date as what? April 15th.
But you told me that's tax deadline date for single filers.
Right. For individual filers. Individual filers, individuals and families, but there are other due dates. So we want to make sure that you don't run afoul of just not filing on time and costing yourself some money that's unnecessary. Because what is happening now is the IRS is a little understaffed. They're understaffed, underfunded. They don't have the resources that they used to have. It would not be unusual for you to be on hold at least an hour if you call the IRS nowadays. The good old days of going into the federal building at 8th and Marshall, just walking in and taking a number, they're over. You have to call and make an appointment. They will not even let you in the office if you don't have an appointment for most transactions. So they are understaffed, underfunded. So what they're doing is they're going after the low-hanging fruit. So easy things that they can do to generate revenue, make money. They are the Internal Revenue Service.
You're going to have to hold that thought, though.
Okay. All right.
You hold that thought. Hanging fruit.
Low-hanging fruit. The easy things where they can make money, they can bring revenue into the government.
Oh, my goodness. You hold that thought. We're going to take a break and come on back. This is Community Conversations. This is Community Conversations. I am Miss Community Clovia. Derrick Alford with Fiscal Fitness Tax and Financial Services Inc. is joining me on the show. And we've been talking about tax season. We talked about the new changes. We talked about the new scheduling. We talked about tax planning. And the last thing you said before the last break was, and I just wanted to make sure everybody heard this, some people, not saying all, did accrue Christmas holiday debt. And a lot of times, and I've ran into folks who said, hey, my tax is coming and I'm good. So you're saying to do some great tax planning is to save some of that tax refund money.
Yes. That's
Okay.
exactly what I'm saying.
Right,
I would say be a little more conscientious and be maybe a better steward. Look at your stewardship with that tax refund.
Your tax refund money.
Yes,
Okay.
yes. So if you don't, that's one of the things. If you don't have an emergency fund, you should establish an emergency. And this may be a way to seed and start that emergency fund with your tax refund. Okay, another bit of information that I've come across is that many Americans do not have adequate retirement assets. So they're not prepared for retirement, some in any way, shape, or form. They don't have any type of retirement asset. So again, you can utilize with proactive tax planning. You can utilize your tax refund. If you have other assets, you can make IRA contributions, and also those are deductible. So we can actually change the tax. It can help change your tax return by making an IRA contribution. So if you have not been planning for retirement or have not put anything away for retirement, then that will be another way to utilize your tax refund. Putting in some of that refund, or all, some or all, into a retirement plan. I'd say at least 10%.
Oh, okay.
Yeah, at least 10%. So, or as much as you can stand, or up to the cap, because for example, the IRA contribution now is $6,000 for someone under 50 and $7,000 if you're over 50.
Mm-hmm.
So you can only go up that high, and depending on your income, whether or not there are different types of IRA. And also, we see people not participate in their 401k plan. They have it available to them, and they're being matched some kind of way.
Mm-hmm.
You should definitely be in your 401k plan. Even if you can only do $10 per pay, you should definitely do it. So those are some of the things that I would say you want to be proactive about. Acquiring appreciable assets. Appreciable assets, which for everyday folks, as Sly Stone would say, everyday people, a house. That's an appreciable asset in most cases, in most economies. So
We know renting isn't.
yes, right. So you can build up equity, you can build up your net worth by acquiring a house, utilizing this tax refund or tax planning to do that.
Okay.
So a couple weeks ago, you had a mortgage banker on, and they were talking about these first-time home buyers programs, and it's true. Because one of those organizations, excuse me, is right up the street from our office. So I sashayed up in there to see what they had to offer. And they had some very good, innovative programs to offer. But you had to have a little bit of money, $1,500, $2,000.
Yeah.
So if you get a $5,000-$6,000 refund, you're renting, and you desire to be a homeowner, there may be a program out there for you.
Mm-hmm.
So also,
and plus you already have the upfront money.
right, you had the money. If credit is an issue, they can work with you on that. So like I said, utilize this, make this money work for you. Don't be frivolous with it.
Don't spend it on depreciable.
Yes, yeah. Okay, we're having accounting class here as well. So right, try to acquire appreciable assets so that what you put the money into is growing. That asset is growing. And also you have tax deductions. When you buy this house, you can write off the mortgage, loan, the real estate taxes. If you have mortgage insurance, you can write that off now. And they mentioned something that goes past a lot of people. There's a thing called a mortgage interest credit.
Yeah.
And VHDA, that's one of the housing agency here in Virginia, they have programs where you can receive a mortgage interest credit, and that's an extra kicker on your tax return. You could perhaps accentuate your refund, get a larger refund, reduce your tax debt by this mortgage interest credit. So I would say, take advantage of all these programs, take advantage of refunds, tax planning, and the like.
And just give you a call, Derrick Alford.
Right. If you can't navigate it, give us a call at Fiscal Fitness Tax and Financial Services. We'd be more than happy to help you to navigate it, because taxes can be complex. And so don't give yourself a headache. Just give us a call.
Fiscalfitnesstax.com. Derrick Alford, thank you so much for our tax season lesson.
Amen. Okay, my pleasure. Thank you much again, Clovia, for having me. Blessings and much success to your listening audience.
This has been Community Conversations. Thank you for listening.
All right.